Good afternoon, everyone, and thank you for joining us. Before we get started with the presentation, I just wanted to give you a few logistics. My name is Robin Dixon Jefferson from the Events Management team, and joining me as my co-host is Tracy Wade, Events Management Specialist as well on our team. If you are having difficulty getting into the session and would prefer to come in via your telephone, please use the telephone number and the access code that are highlighted here underneath audio connections. Attendees, your microphones will be muted upon entry for this event. If you have any other difficulties, please reach out to me via my email or use the chat box to send a message, and we should be able to connect with you, either myself or Tracy. If you need closed captioning, a link will be posted in the chat box for you. Just click on the link and paste it into your browser. Questions will be answered during this session. At the end of the session, please use the chat box, which is located on the right-hand side of your computer screen. Make sure that you use the "to everyone" to ensure that all the panelists and other attendees can see your question and or comment. And with that, I will now pass this over to our presenters for this afternoon. Thank you for joining us.
Thank you so much, Robin. Greetings, everybody, and thank you for joining us for this special event hosted by Consumer Financial Protection Bureau. This is a free resources from CFPB to help financial institutions serve older account holders. We're so glad you're here with us today. Now, personally, I am excited and ready to learn about the best practices to engage our older members. So without further ado, allow me to introduce our three speakers for today's session. So first, you will hear from Tricia Kearney-Willis. Ms. Tricia serves as Assistant Director for Financial Institutions and Business Liaison at the Consumer Financial Protection Bureau. Now, prior to joining CFPB, she served as a Senior Advisor at the U.S. Department of Treasury and as a Manager for the Office of Training and Outreach within the agency's Community Development Financial Institutions Fund. At the U.S. Department of Commerce, Ms. Kearney-Willis served as Division Chief for Regional Management at the National Institute of Standards and Technology, or NIST, Manufacturing Extension Partnership, or MEP. She led federal oversight of 51 MEP centers located across 50 states and Puerto Rico to help U.S. manufacturers improve global competitiveness, strengthen supply chain integration, and adapt new technologies. Then you'll hear from Deborah Royster. Now, Ms. Royster serves as the Assistant Director, Office for Older Americans at the U.S. Consumer Financial Protection Bureau. In this role, Ms. Royster leads a team of talented, mission-driven professionals to advance the mission of the Office for Older Americans to help protect older consumers across the nation from financial harm and to help older consumers make sound financial decisions as they grow older. And last but certainly not least, you will hear from Kate Kramer. Ms. Kramer is a policy analyst with the Office for Older Americans at the Consumer Financial Protection Bureau. Ms. Kramer's work focuses on age-friendly banking, financial technology, elder financial exploitation, and protecting people living in assisted living communities and nursing homes from financial abuse. Before joining the CFPB, Ms. Kramer worked with older crime victims as the project director of the Elder Rights Center at the Area Agency on Aging of Palm Beach and Treasure Coast. Please help me welcome Ms. Tricia Kearney-Willis.
Thank you so much, Espy, and good afternoon, everyone. As Espy shared, I'm Tricia Kearney-Willis, and I serve as CFPB's Assistant Director in the Office of Financial Institutions and Business Liaison. My team is responsible for leading management of the Bureau's relationships with financial institutions, trade associations, law firms, and for-profit business stakeholders. It's my pleasure indeed to welcome you to today's CFPB webinar on age-friendly banking resources to help financial institutions serve older account holders. We're pleased to have this opportunity to join our partners at the Bureau's Office of Older Americans, as well as the African American Credit Union Coalition. And I'd also like to just take a quick moment to thank Senior Advisor Charles Yohanik on my team for his contributions to today's event. And now I'd like to turn it over to my colleague, Deborah Royster, Assistant Director for the Office of Older Americans. Deborah?
Thank you, Tricia. And good afternoon, everyone. Welcome, and we thank Renee and Denise for inviting us to serve today or to participate today in today's webinar. We are very grateful for the opportunity to connect with the members of the African American Credit Union Coalition today. Before we begin the webinar, I would like to read a brief disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. It does not constitute legal interpretation, guidance, or advice of the Consumer Financial Protection Bureau, and any opinions or views stated by me are my own and may not represent the Bureau's views. Next slide, please. I'd like to begin by telling you a little bit about the mission of the Consumer Financial Protection Bureau, which is to help consumer financial markets work by making rules more effective, by consistently and fairly enforcing the rules, and by empowering consumers to take more control over their economic lives. The Office for Older Americans is a part of the Consumer Financial Protection Bureau's Consumer Education and External Affairs Division. Our work focuses on educating consumers and intermediaries and working to help protect older consumers from financial harm and to help older consumers make sound financial decisions. Many of our resources are targeted towards adults age 62 and older, financial caregivers, or professionals who interact with older adults. The Office for Older Americans also has several resources specifically targeted to financial institutions, including reports, advisories, and free consumer education resources. We are very excited today to share some information about our office's age-friendly banking work. Our office strives to provide helpful free resources to educate older consumers and to support banks and credit unions in their efforts to engage with older account holders and to prevent financial fraud against older adults. So why is age-friendly banking important? I'd like to set the stage for today's webinar by sharing some information about elder financial exploitation and the impact that it has on the financial security of older adults. Over 23 million Americans aged 60 and older are economically insecure. And this means that even a small financial loss can be absolutely devastating to their financial well-being. Often, older adults are living on a fixed income, and it can be extremely difficult for someone to weather a financial loss when they don't have much flexibility in their budget to begin with. A TrueLink study found that 37% of older adults were victims of elder financial exploitation in a 5-year period. And average monetary losses were higher among lower income older adults. The Office for Older Americans analyzed suspicious activity reports that were filed by financial institutions from 2013 to 2017 that involved elder financial exploitation. And in this study, we found that when an older adult lost money to elder financial exploitation, the average loss was approximately $34,000. So you can imagine what an impact a loss like that might have on someone's financial well-being. Most recently, our office issued a data spotlight on recent suspicious activity reports that were filed by financial institutions on reporting suspected cases of elder financial exploitation. You can find this resource on our website. But one of the really startling statistics that we found was that the total in 2020, from 2019 to 2020, so during the period leading up to and during the pandemic, it is clear that incidents of suspected elder financial exploitation are increasing. And the amount involved of suspicious activity reports involving elder financial exploitation was $3.4 billion in 2020, which was an increase of $2.6 billion in 2019. And this is the largest year-to-year increase since 2013. So this really gives us a sense of the magnitude of this issue and why it is so important for us to focus our attention on preventing elder financial exploitation. And the financial effects, the non-financial effects rather, of elder financial exploitation are important as well. Financial losses from elder financial exploitation can negatively impact the quality of life for older adults in many areas, including access to healthcare, eligibility for public benefits, housing, food, and credit, and the ability to retire. Of the older adults who experienced fraud in the TrueLink study that I referenced earlier, 1.8% lost their home or other major asset as a result. 6.7% skipped medical care, and 4.2% reduced their nutritional intake for budgetary reasons. The study estimated that 954,000 seniors are currently skipping meals as a result of financial abuse. And many individuals suffered depression, anxiety, or loss of independence. Overall, 41.2% of older adults who experienced financial abuse reported that they experienced non-financial impacts like these as well. So why is age-friendly banking important? A credit union account or a bank account enables consumers to safely and easily deposit income, pay bills, and make everyday purchases. And when older adults are connected with a credit union, age-friendly interventions can really help to prevent elder financial exploitation. Examples of some age-friendly practices include financial institutions asking consumers to identify a trusted contact whom staff can contact in case of suspected financial exploitation, financial institutions placing holds on transactions or delaying disbursements when they suspect elder financial exploitation, and financial institutions reporting suspected elder financial abuse to authorities such as Adult Protective Services and local law enforcement. In addition, age-friendly innovations can include financial technology, such as automatic transfers and bill pay, automatic alerts and financial management applications, and personalized reminders and alerts. These types of interventions can help prevent financial exploitation of older adults and decrease the fraud losses that are sustained by older adults. However, many older adults do not have access to a credit union or a bank account. And these unbanked and underbanked individuals typically engage at least once a year in alternative financial services such as check cashing and payday loans that often involve very high fees. Older adults with limited English proficiency or who come from lower income households, Black households, Hispanic households, and American Indian or Alaska Native households are less likely to have a bank or credit union account. For households for households headed by someone aged 50 to 64, 3% of white non-Hispanic households had no bank accounts, while African American and Black non-Hispanic households had unbanked rates more than 5.5 times as high, and Hispanic and Latino households more than 4 times as high. These individuals already face significant financial challenges and other challenges to their financial well-being. Therefore, it is critical to increase access to credit union and bank services and age-friendly product features to help address existing disparities. Now I will turn the program over to my colleague, Kate Kramer, so that she can share more information about our age-friendly banking work with you. Kate?
Thank you so much, Deborah. We find in our work that older adults really need age-friendly financial services and products that are accessible, responsive, and relevant to their needs, and in particular, those services that can help prevent elder financial exploitation. And credit unions and other financial institutions have led and participated in many different innovations and explorations of age-friendly practices over the years. And our Office for Older Americans works to support credit unions and banks in enhancing their ability to prevent and recognize elder financial abuse and to protect older consumers. Now, ultimately, the goal of our age-friendly banking work is to reduce the number of older adults who are unbanked or underbanked and who are digitally disconnected and financially exploited. And credit unions and other financial professionals are really uniquely positioned to detect elder financial exploitation and to take action on this issue. Our work around this issue includes consumer education, so working to reduce stigma and shame, working to educate community members about red flags of financial exploitation so that they can recognize when it's happening, and encouraging reporting to Adult Protective Services or law enforcement, and also sharing resources for prevention and response. Our work also includes engaging financial institutions and other key stakeholders in the fight against elder financial exploitation. And we'll talk a little bit more about some of the work and resources that we have. So one recent release from our age-friendly banking initiative is our new promotional toolkit. This is designed to help spread the word about our free resources for credit unions and banks. And that includes information about elder fraud, suspicious activity reports involving elder financial exploitation, as Deborah mentioned, voluntary age-friendly banking practices, as well as consumer education tools like our Managing Someone Else's Money Guides for Financial Caregivers, our Money Smart for Older Adults Scam Prevention curriculum, and our free fraud prevention placemats and handouts. We'll talk more about several of these resources in just a moment. But the promotional toolkit includes several pieces of content that you can easily insert into a newsletter, a blog, an email blast, or a social media post to share these free resources with your audience. Here's an example of one piece of content from the promotional toolkit. So this is a sample email or newsletter post, and you can easily copy and paste this to share it with your members or your colleagues to give them information about the various free resources that could help them with their elder fraud prevention efforts. And these are just a few sample Twitter posts as well from the promo toolkit. And if you have a Twitter account or other social media account, this is a really easy way to share these resources. And these are a couple of longer sample social media posts. This could be used in Facebook or LinkedIn or other platforms that let you use more characters per post. And again, you can copy and paste these along with the included links to direct your members or your colleagues to CFPB's free resources. So hopefully that gives you a flavor of what you can expect in that new age-friendly promo toolkit. And the website is in the PowerPoint, so we can share out the PowerPoint slides after today's session so that it's easy for you to click through and find them if you'd like to use the materials. Now let's take a look at some of our Office for Older Americans free resources for financial institutions. And first, I'd like to share some of our financial institution advisories and voluntary recommendations for age-friendly practices. As one example of our past age-friendly banking work, in 2016, we released our advisory and recommendations and report to financial institutions on preventing and responding to elder financial exploitation. And these documents contain voluntary promising practices. They're designed to enable financial institutions to prevent elder financial abuse and to intervene when they recognize it. Some of the key recommendations in these resources include information on how to develop and maintain internal protocols and procedures that protect account holders from elder financial exploitation, information on how to train personnel on elder financial exploitation, including a large list of warning signs or red flags that might signal financial exploitation, and also action steps for prevention and response. Information on using technology to monitor for signs of financial abuse, which could include reviewing filtering criteria against individual members' patterns, or exploring additional risk factors that could be associated with financial abuse. There's also information in here about filing suspicious activity reports while using that checkbox for elder financial exploitation, and information about complying with federal regulations and establishing procedures so that account holders could provide advance consent for the financial institution to reach out to a designated trusted contact person if staff believes that the account holder might be at risk of financial abuse. And this advisory and report and recommendations are available for download online, and they're also available for free print order, as are most of our resources. We released an update to those recommendations in 2019, and our update was focused on how financial institutions can best report suspected elder financial abuse to the appropriate authorities like Adult Protective Services or law enforcement. This update provides an overview of recent federal and state legislative changes, and that includes an overview of the Senior SAFE Act, and it also includes charts of state statutes that are related to mandated reporting of suspected elder financial abuse. There's a chart about transaction holds or disbursement delays when elder financial exploitation is suspected. And there's also a chart that reviews state laws around sharing records with Adult Protective Services and law enforcement. So those may be of use to you depending on what state you're operating in. And the update also encourages credit unions and banks to report all cases of suspected elder financial abuse to the relevant federal, state, and local authorities. And we encourage that regardless of whether reporting is mandatory or voluntary under the state laws. We also encourage an expedited response if Adult Protective Services or law enforcement or other government entities are conducting an active investigation and they request documentation from financial institutions related to that elder financial abuse investigation. These recommendations are designed to help financial institutions to assess your policies and procedures and to decide whether there are other measures that might be helpful for you to put in place as you work to prevent elder fraud. Our next resource relates to the elder financial exploitation SARs that Deborah mentioned earlier. And as you may know, the Federal Bank Secrecy Act mandates that financial institutions report suspicious activity that might indicate some sort of financial criminal activity to FinCEN, and that's the Financial Crimes Enforcement Network, which is part of the U.S. Department of Treasury. And the financial institutions that are required to file SARs include many types of entities, including banks, credit unions, money services businesses that do money transfers or wires, broker-dealers, and quite a few others. Access to the SAR and even knowledge of the existence of a SAR is generally limited to law enforcement and to certain financial regulatory agencies. And law enforcement can use that SAR information to trigger new investigations, to support ongoing investigations, or to identify subjects who they might want to investigate further. In 2011, FinCEN put out an advisory where they noted that SARs are a very valuable way for financial institutions to report elder financial exploitation. And in that advisory, they also shared some red flags that could help to spot elder financial exploitation. And those include transactional and behavioral red flags. Now, transactional would be things like frequent large withdrawals or uncharacteristic attempts to wire large sums of money, whereas behavioral flags are things that a teller or someone else on the front line might notice. So for example, if someone comes into a bank with a caregiver and they look uncomfortable or their behavior seems out of character for them. And in 2013, FinCEN introduced the electronic filing of suspicious activity reports. And on that electronic form, they included a new designated category or checkbox for elder financial exploitation. So a few years after that elder financial exploitation checkbox was added to the SAR form, our Office for Older Americans analyzed the SARs that were filed between April 2013 and December 2017. That was about 185,000 SARs. And throughout the project, we worked closely with FinCEN staff. So we looked at elder financial exploitation SARs where the filing institution either clicked that elder financial exploitation checkbox, or maybe they selected the other category under the suspicious activity category and they wrote some variation of the word elder in the open text field, such as elder abuse or elder financial abuse. And we read full transcripts of a representative sample of those SARs to help us make findings about the patterns and issues and the dollar amounts that were involved. We found that elder financial exploitation SAR filings quadrupled from 2013 to 2017. And this was a much greater growth rate than the overall growth rate for all SARs which was only about 40%. The incidents that were reported in these, however, likely account for just a tiny fraction of all the incidents of elder financial exploitation in a given year. We know that this is an issue that is really underreported and often flies under the radar because it can be really difficult to determine whether financial exploitation is occurring. Based on one of the lowest estimated prevalence rates, there were 3.5 million cases of elder financial abuse in 2017. However, there were only about 53,000 SARs that were filed on elder financial abuse in 2017. We found that losses were much greater when the older adult knew the suspect than when the suspect was a stranger. And we really found that elder financial exploitation, as we expected, is very widespread and damaging, and that there is a real need for strong interventions by financial institutions, law enforcement, social service agencies, and policymakers. So if you're interested in learning more, please read that SARS report to get more information. And as Deborah also mentioned, we recently released a new data spotlight that analyzes recent trends in suspicious activity reports. So this is an update to our previous report. And this includes information about the SARs that were filed in 2020 to show how data and trends have changed since we released that 2019 report. And in 2020, financial institutions filed over 62,000 elder financial exploitation SARs involving over $3.4 billion. I'll just share a couple of our findings and then you can take a look at the report if you're interested. But the dollar amounts that are involved in the suspicious activities that were reported in these SARs include actual losses to the older adult or to the filer, as well as unsuccessful attempts to steal the older adult's funds, or sometimes in a certain case there might be both an attempt and an actual loss. Because SARs report the actual amount involved as observed by the financial institution, some reports include really uncommon amounts, often in the billions of dollars. Maybe someone tried to deposit a fake check worth $1 billion, or they attempt to withdraw $1 billion from a customer's account. Well, since these are so uncommon, we excluded the total amounts from the top 1% of SARs by year, so those aren't in the analysis. But after we excluded those, the total amount involved was $3.4 billion in 2020, which is a huge increase from the $2.6 billion that was involved in 2019. So this is the largest year-over-year increase we've seen since 2013. And there are sometimes a variety of financial products and services, as well as payment methods, and sometimes there are multiple products and services or payment methods that are involved in a suspicious transaction. And in more than half of the SARs that were filed in 2020 involving elder financial exploitation, a checking or savings account or a money transfer was involved. Cash was involved in about 38% of the SARs, checks were involved in about 24%, and debit cards and credit cards were involved in 17% and 12% of the SARs respectively. One thing that was interesting is that despite the millions of stimulus payments and the unemployment benefits programs and payments that were being issued to older Americans, in addition to their regular Social Security benefits and tax refunds, only about 3% of all of the elder financial exploitation SARs filed in 2020 involved a government payment. However, even though this was a small percentage, this was a huge growth from the 1% that had involved a government payment in previous years. So we did see an increase in the use of government payments to perpetrate fraud. And to learn more about our findings, please go ahead and read the data spotlight on our website. Now, as Deborah shared with you, although many older adults do use bank and credit union services, there is an increasing number of older adults, particularly those from underserved racial and ethnic groups and those with lower incomes, who are either unbanked or underbanked. And our office works to reduce those racial and income-based disparities that impact older adults' access to banking services and financial technology. So one of our two main goals for our age-friendly banking work in the coming year is to reduce the number and proportion of older adults from historically underrepresented groups who are unbanked or underbanked and who are digitally disconnected. And our second main goal is to encourage financial institutions to implement more age-friendly practices and to expand their capabilities to prevent and respond to elder financial exploitation and to protect older account holders' assets. And we know age-friendly banking is even more important during the COVID-19 pandemic because access to age-friendly online and mobile banking services has become essential when older consumers may find it difficult or risky to their health to go into a branch in person. And even though more older adults are adopting financial technology, and many are extremely savvy with financial technology, low to moderate income older adults do face unique barriers like lacking autonomy, fearing risk from financial technology, feeling tech challenged, or being digitally disconnected. And older consumers really need to be informed about the potential risks and benefits of these financial technology tools so that they can help them manage their finances and prevent elder financial exploitation. So in line with these goals, we recently released a new Ask CFPB page on remote online notarization. Now, usually someone who wants a document notarized would meet with a notary public face-to-face and sign with ink on paper. But with remote online notarization, notaries could meet with you on video and verify your signature on an electronic document. This service has become more common and was adopted by many states during the pandemic while offices were closed. And many states have laws that allow remote online notarization on a permanent basis, while others have put temporary measures in place to allow it just during the COVID-19 pandemic. But as places are reopening, this service can still be useful for convenience, as well as if you're signing in a different state from the notary. And older adults might decide to use this due to concerns about social distancing or physical safety, in particular with different variants on the rise. And this service can also be helpful for people who have mobility or transportation challenges that make it difficult for them to go and visit a notary in person. And in line with our goal of strengthening those age-friendly banking innovations that fight elder financial exploitation, our Office for Older Americans just released 2 new advisories yesterday. So these are very hot off the presses, and we're very excited that you all are probably the first to hear about them. And this project was driven largely by conversations that we had with banks and credit unions who were beginning to implement this practice. And they told us that they saw a need for more resources and more consumer education on the topic to help encourage their customers and members to take advantage of this protective account feature. So as you may know, broker-dealers, along with some banks and credit unions, are allowing account holders to designate a trusted contact person whose staff can contact about specific concerns. This is a way that financial institutions can help consumers to protect their financial well-being. Now, the trusted contact person they choose could be an adult child or a close friend who the credit union or bank could reach out to for some extra help. Generally, the financial institution would only reach out to a trusted contact in specific situations. For example, staff might alert a trusted contact if they can't reach the account holder, or if they suspect that the account holder may be at risk of financial exploitation. And trusted contacts don't have any access to the account holder's money or their financial information. They just get notified if the financial institution has concerns about the account holder's financial safety, so that the trusted contact can step in and help connect the account holder with the bank or credit union to resolve the situation. You can kind of think of a trusted contact as an emergency financial contact. And yesterday we released the new advisory for financial institutions, which includes several voluntary recommendations about alerts to trusted contacts. We hope those recommendations will be helpful for credit unions and banks if they decide to voluntarily implement this practice. And the advisory provides information about how to develop relevant policies and procedures, how to educate account holders, and how to train and support your staff if you're implementing this practice. We also released a new guide for consumers, which explores how designating a trusted contact can help them to protect their money without giving up control over their finances. And you can download either of these guides online. You can also order free print copies of the consumer guide to hand out to your members to help educate them about this topic if your institution does offer the option to choose a trusted contact. So let's look now at some of CFPB's other free consumer education tools that you can use in your community. Our Managing Someone Else's Money guides walk caregivers through their duties. They also explain key terms and concepts, and they provide resources where financial caregivers can get help with different situations. We have guides for 4 common types of financial caregivers about how to manage someone else's money. Those are for agents under power of attorney, guardians and conservators, trustees, Social Security, and Department of Veterans Affairs representatives. We also have a tips and templates guide for adapting the guides to your state, and we have a co-branding guide if you'd like to add your institution's logo and information to the guides and share them in your community. Here's an excerpt from our Power of Attorney guide, and each of the 4 basic duties you see listed here is explored in greater detail within the guide. These are wonderful items, I think, to order in bulk, and you can hand them out to your members or their families who have questions about power of attorney, guardianship, or other financial caregiving roles. You could order these for free and keep some at your branch to share as needed. And many people are serving as financial caregivers in various capacities, and they can use the information in the Managing Someone Else's Money guides to help them make strong financial decisions on behalf of their loved one. Next resource is our Money Smart for Older Adults curriculum. This is a scam awareness program that we developed together with the FDIC. There are multiple components to the program. So there's an instructor guide and a PowerPoint that can be used to deliver presentations to groups. And there's a resource guide that can be provided to groups or individuals. And the Money Smart curriculum can be presented in segments or all at once. Credit unions and banks can use our free, fully scripted instructor guide and our PowerPoint and the accompanying resources to present this program for older adults in your communities, or you can just order copies of the resource guide to hand out or to review one-on-one with an older account holder to learn and discuss together. You can order those resource guides for free in bulk from our website. And in the next few slides, I'm going to show you some examples from the Money Smart curriculum so you can get a sense of all the resources that are included in this program. This is an excerpt from the script for the PowerPoint, which is included in the instructor guide. You can see the PowerPoint slides that it's referencing there on the left side. The instructor guide, like I said, is fully scripted. It has the corresponding PowerPoint that you can download to support your presentation. What I love about Money Smart is that it really is a plug-and-play program, and the instructor guide can enable you or your team members to present this really easily in your community. You can add your own notes to the curriculum about scams or fraud schemes that are currently prevalent or that you're seeing in your office to be sure that participants are educated about those scams that are hitting close to home. The instructor guide has a presentation planning guide, it has activities, a summary and post-test for the participants, and an evaluation form also. This is an example of one of the exercises that's included in the curriculum. We provide just a brief scenario, and then we ask participants to identify what steps the person in the scenario should take next. This is from the instructor guide, so in the resource guide, rather than answers, there would be blanks that the participant would fill in with their own answers. And going through these exercises is a great way to practice scam prevention with older adults in your community. This is the top portion of an activity page from the resource guide, so this is the handout for folks who are taking the course. And this particular activity, which is called the Identity Theft Self-Check, is a great reminder, I think, of simple steps that we should all be taking to protect ourselves from identity theft. And I know I can see one on there that I often overlook or forget myself, so it's a good reminder for all of us. And the resource guide has information and activities to help learn the material. It has a glossary of key terms, and it has resources on managing money and reporting financial exploitation. The resource guide is in 14-point font to make it a little more accessible and readable. The next resource is our popular fraud prevention series. This helps banks and credit unions share important information about avoiding common scams. For example, we have free resources about romance scams, which is one type of scam that we've seen expanding more and more each year. This is really a growing problem that's affecting a lot of people of all ages, and in particular older adults. We also have resources about family member in need scams, IRS imposter scams, Social Security scams, fake charity scams, and many more. And you can order our free placemats, posters, bookmarks, and table tents, so all types of different handouts in English or Spanish, and you can order them to display at branches or use for events. You can also download the digital handouts and share those in an email newsletter or on your website. These are colorful, they're catchy, and they're simple, and we've seen financial institutions and other community organizations using them in a variety of ways. Here's one example of a placemat that features a word search activity. And this is the backside of that same placemat, which contains the answers for the word search and also has definitions of these key terms and common scams. And one way that financial institutions can collaborate with community partners is through an elder fraud prevention and response network. These networks, often also called coalitions, task forces, financial abuse specialist teams, go by many different terms, are ongoing and collaborative efforts where different types of professionals work together to prevent or respond to elder financial exploitation. And the key partners are often law enforcement, financial institutions, adult protective services, legal services, victim services organizations, and others. Our Office for Older Americans several years ago started an outreach initiative where we worked to help communities in several different states build new networks and also helping existing networks grow in size or scope or enhance their impact. As a result of these convenings, our office developed a model for identifying locations for potential networks and coordinating with those key stakeholders to facilitate meetings and build support to help create and enhance the local networks. Network members like credit union staff and law enforcement officials shared that we're already working busy full-time jobs. We could really use some ready-made resources to establish and maintain a network in our communities. So to meet this need, we released our network development guide just last year. And the guide contains resources for planning and facilitating a network retreat, reconvening the network, expanding network capabilities, and much more. So if you're interested in joining an existing network in your area or helping start a network, please check out this guide. We have consumer advisories on all the topics you see here and many more. One I'd like to mention, which we've recently updated and added to, is our Planning for Diminished Capacity Guide. This is a really fantastic resource for credit unions and banks to share with members or customers to help people think ahead and put plans in place like powers of attorney or other types of strategies to protect themselves in case they need help managing their money in the future. This is another consumer advisory that might be helpful to share with account holders because it teaches older consumers how they can work together with their credit union or bank to protect themselves from fraud. You can order our consumer advisories in bulk, and you can keep them in a literature rack at your branch or hand them out at events, seminars, or luncheons. One I'd like to mention also that is a brand new resource, which isn't even in this slide deck, is our Choosing a Financial Caregiver resource, which was recently added to our Managing Someone Else's Money guides for financial caregivers. And that new resource focuses on the very early steps of figuring out who is a good financial caregiver for you, what type of financial caregiving help you might want in the future or at the current moment, and helps people work through the different steps to identify the right person and to put the right documentation or plans in place to set up either a formal or informal financial caregiving relationship. And that's a wonderful resource, and I'll pop that in the chat as well once I'm done speaking today so you all can have it. And the final resources I want to share with you today are CFPB's resources related to the coronavirus pandemic. We have a central hub with resources that are designed to help consumers protect and manage their finances. These resources are available in English as well as multiple other languages, as you can see here. The site also has some federal coronavirus resources from other government agencies. And we also released a unified housing website with several other federal agencies to provide consumers with mortgage and housing assistance during the pandemic. This includes our new Rental Assistance Finder tool just released this summer to help renters find resources in their state or locality that can help them pay for their rent or utility bills if they've fallen behind during the pandemic. These sites are getting updated all the time as the situation changes, so if you're looking for coronavirus support or content, it's important to check back for updates. These are a few examples of our coronavirus content. Some topics include information about how consumers can financially protect themselves, including credit and debt management, student loan repayment, mortgage relief options, scam prevention, and online and mobile banking tips for those new to the online technology. And there, like I said, are many topics being added to this website regularly. And as always, consumers who have a problem with a financial product or service can use CFPB's complaint submission process to help them connect with the company and get an answer to their situation. Finally, our Ask CFPB resource contains answers to a variety of financial questions. If you're working with someone and they ask about a financial product or service, it's likely that you may be able to find an answer here. There's just absolutely a ton of content in our Ask CFPB resource. So please poke around here if you're looking for information about a financial product or service. So we hope that this overview of our age-friendly banking work and our free resources for financial institutions was helpful. And I'd just like to thank you all for your time and attention today. For those who are interested in learning more and getting occasional updates and alerts from our Office for Older Americans as we release new resources or blog posts, I would invite you to visit our website listed here and look at the sidebar to join our mailing list, and we'll send you a couple pieces of email here and there when we have new resources. Our office would really love today, in the time that we have remaining, to hear from you as well. Any questions that you might have, as well as any comments or insights that you might want to share about recent age-friendly banking innovations that you've implemented, or your perspective on financial technology use by older adults, or challenges that are faced by traditionally underserved groups of older adults with regard to maybe access to financial services, or barriers or opportunities that your institution is experiencing when you work to address these issues. So please feel free to type any questions or comments into the chat box now. Or of course, you can reach out to us anytime by email at olderamericans@cfpb.gov listed here. We really look forward to connecting with you, and we'd love to hear from you in the time remaining. If you have questions or comments or anything that you'd like to share, we're really happy to get your input and incorporate that into our work going forward.
Thank you, Kate, and thank you to our other speakers today. As Kate mentioned, if you do have any questions, please enter them into the chat, and we will try to get to all of the questions that we can. Sherry, or Shuri, I'm not sure how to pronounce that, says we certify our front-facing staff annually about elder exploitation.
That's fantastic. Is there a certain training that you're using that you would recommend to others, or any strategies that you might have to share with others who are looking to train their front-facing staff on elder financial exploitation? I'm always curious to know whether people are coming up with their own or using a free curriculum that's available online. And if you'd like to be unmuted as well to share information, you can type that into the chat box and our moderator can unmute you if it's easier to do that than to type out an answer, and that goes for everyone.
Okay, she stated that we subscribe to a BVS service of courses.
It's a full training library, and so annually our BSA department have the staff to do these courses, but the rest of the year there are all kinds of courses in there for lending, customer service, sales. It's very robust training program.
That sounds fantastic. I am really interested to learn a little bit more about that. I think whenever I come across training materials on red flags and next steps and how to recognize, report, and even help in how to talk to a consumer who's coming in convinced that the person that they're sending money to is, a romantic partner rather than a scammer, I think all that information can be really critical.
Thank you, Kate, and thank you for the great feedback. Jamie would like to know, is there any information available for board awareness in these areas?
I'm not totally sure how to answer that question. Board awareness, would that be, Jamie, if you could give a little more context, that would be really helpful.
areas like risk management and things like that. Are there other resources that I can provide to them from a financial fiduciary standpoint, not just a member standpoint? Like, is there, like, we have these tools and these resources and things, and I know it's free and available for everyone to go to, but is there anything that and I was just kind of looking at the different tabs, anything available that we can share from that perspective, like the board can help to execute for the smaller credit unions and things like that, that they can be aware of and kind of, what am I trying to say? Just to be more responsible in that area along with the credit union staff and management.
That's a great question. I hope
Mm-hmm.
that some of the voluntary recommendations for financial institutions might be helpful, even just for food for thought for conversation, to get staff and board members talking about some of these topics and brainstorming ways that are, feasible and helpful to implement even in small, mid-sized, larger credit unions, all different types of locations and setups. I think those might be helpful. And Sherry actually mentioned in the chat that the local chapter of credit unions likely may have resources available for the board as well. So it's possible that there are some others available there. But I know as well that some national organizations and state organizations have developed training for financial institutions and other financial professionals that is geared towards recognizing red flags, reporting, and other key aspects to the work to fight elder financial exploitation. So I'm not able to share those in the chat, but there are definitely some federal resources and national organizations resources out there that provide training for financial institution staff, and many of them I think are free.
Great. Thank you, Jamie, and thank you, Kate. I don't see any other questions coming into the chat at this time. Throughout Kate's presentation, I've been furiously entering our links into the chat. So if you need to reference any of those, just feel free to scroll up and they should still be there.
Thank you so much, Shannon.
Sure, absolutely, no problem.
And if anyone thinks of other questions, or if you just want to share your feedback or your insights on what you're experiencing in your institution or your day-to-day work that you think our Office for Older Americans could be supportive of or could develop resources to help with, we would love to hear from you. So please feel free to email us even 3 weeks after this presentation, anytime you want. We'd love to hear from you and start the conversation to learn from you.
Great. I'll just give a final thank you to our speakers from the CFPB and the African American Credit Union Coalition. If you would like to access the recording of this presentation, please visit our webinar archive at consumerfinance.gov/olderamericans. To take us maybe about 7 to 10 days to get this presentation posted along with the transcript. Or if you have any questions or comments, like Kate mentioned, about any of the information in today's webinar, please do reach out to us at olderamericans@cfpb.gov. Thank you for joining us for today's presentation and enjoy the rest of your day.
So very much for joining us. Have a great evening.